What you're trying to do is possibly going to change the whole landscape of Indian investing. What does your company do that others don't?
Anyone can open up Claude or anyone can open up ChatGPT and ask for some recommendations. We use AI to hopefully give people better investment outcomes. We tell you what to buy, we tell you when to buy it, and really, really importantly, because lots of people can do that, we tell you when to sell it and then what to buy in its place.
How many investment managers or fund managers are actually working on this along with your tech?
Your typical investment shop would probably have about, I don't know, 20 to 40 researchers around that. Mm-hmm. We've got 5.
What happens to the wisdom or the instinct sometimes, or that gut feel that wealth managers bring?
I think good wealth managers absolutely have a place. AI is really good at short-term recommendations because it can crunch lots and lots of data. But I wouldn't ask AI to give me a 6 or a 12-month view. If I look at my own portfolio, it's about 25 to 30% of my portfolio I use with AI.
Bruce, great to have you on.
Thank you very much, Tamara. Great to be here.
Okay, so when we usually have people on who have disrupted the space before them, as people who have tried something for the first time or are fairly new at this, you've been doing this 3 decades.
Yeah, and some. Yeah.
3 decades and some change.
Yeah.
But you've still made it to the disruptors because what you're trying to do is possibly going to change the whole landscape of Indian investing. You think so?
I genuinely believe that it has the potential to do that, and it can or should do that. I think that, and it's not just Indian investing; it's global investing. I just think India as a market has got so much potential that's the right place. That's the right place to start. And if you can make it work in India, you've got to do it on a low unit cost, and that low unit cost means you can then take it anywhere else in the world. So kind of India first, and AI first, and then from there we'll see where it takes us.
Was this an AI investing platform when you started in 2017, or is this a more recent pivot? Because AI is really hot right now.
Yeah, so, it was AI from the start, but we used to call it advanced technologies rather than AI because people didn't understand AI enough. So it was there, it was always there, and it was always at the center. But we kind of put some other words around it to make it easier for people to understand. And I think in a post-ChatGPT world, then everyone's got an idea of AI now. Now, whether that's the right idea or not doesn't really matter. We no longer have to explain what AI is as part of the conversation.
So what was the AI version of your company in 2017 when there was no ChatGPT, when OpenAI had not done what it did, when LLMs weren't part of everybody's life? What was the AI ingredient then?
So the business we have today grew out of that business, and the AIs started off from the same, and it's just built on top of that. LLMs, you're right, didn't exist. So we had to go and build our own foundational platform. And we did that using a technology called computer vision technology. And we kind of built from there, and we built a platform that could do a number of different things across the wealth space. But fundamentally, it was always about stocks and predictions around stocks and what would go on there. So the kind of first iteration, which came out in 2018, was what you see today is version 4 of that. So the platform's kind of in version 4 now, as we've kind of built and done more with it and kind of grown it up. We don't use LLMs for any of our core AI because we've built it ourselves. We've got something that works and is specialized and does what it does. We use LLMs for other stuff in the same way that everybody else does, because LLMs are a really useful tool in using agentic AI and making your business more efficient. But in terms of the core offering, it's our own tech and it's our own foundational models.
So let's get to the core basics first. And, for everyone joining in and watching, what does your company do that others don't?
So very, very simply, we use AI to hopefully give people better investment outcomes. So what does that mean in practice? That means we tell you what to buy, we tell you when to buy it, and really, really importantly, because lots of people can do that, we tell you when to sell it and then what to buy in its place. And it's that second bit that's really important, because anyone can open up Claude or anyone can open up ChatGPT and ask for some recommendations. In fact, you can do it on Google or you can do it on WhatsApp or you can do it anywhere. But what you do need to know is when you should be getting out of that position. So it's that second piece that's kind of really important. When should you be taking the profit and when should you go again? So it's that latter piece that actually delivers the investment outcomes. So that's what we do. So it's about stock selection. It's about then putting the AI together with investment management experience. So I'm not telling you to buy one stock, I'm giving you a basket so you get some diversification. Or if it's on intraday, I'm making sure that when you buy it with stop loss, so you've got some downside protection. Or if I'm doing MTF, I'm actually encouraging you to take your profits early, to bank them and to go again. So you're then putting those knowledge fabrics over and above the AI at the core of it. And what's the outcome? The outcome should be better investment returns or better investment outcomes. And that's what we're trying to do for retail investors.
So let me then just underline that point. How are you different from anything else on offer today? Because a lot of companies want to give this kind of service. If they haven't already, they will soon.
Yep.
Some versions of it, one way or the other. They're very large online platforms and brokers out there who can, if not already, pivot to this quickly.
So I think they can do a version of it. You're absolutely right. And I think, again, you could plug in an LLM and it'll do some of it for you. It won't do all of it. It'll generalize very well. But when it gets to being specific, so what we would call vertical AI, being very niche, then it really isn't at the kind of same level. So what does that mean in practice? So how do you know if your LLM's hallucinating or not? Well, you generally don't. Now, we do, because we feed all of the data into our models. So the fact that we ingest the data and feed the data in and check the data before it goes in means we're in control of what the model's using to come up with its outcomes. There's then a high degree of oversight, human in the loop, as it were, that sort of sits on top of that. So again, because we've been through that whole process, both in terms of data in and in terms of checking on the way out, what that allows us to do is that allows us to sign off from a SEBI perspective that each of the portfolios or investment picks or recommendations have been through a very rigorous process. If you're just going to plug an LLM into your front end and let people ask it questions to come up with what a portfolio looks like, even with guardrails in there, you're definitely not controlling your input data. And I would argue you're not really sure what the output's going to look like either. So if you're going to let an LLM run away like that, you're going to find out you're in trouble with the regulator or indeed with the end customer in 6 or 12 or 18 months' time.
So you say, what you're saying essentially is you have an advantage over others or anyone replicating this because you have your own data tools and your own system.
Own models.
And models of humans who are inputting it. So how many investment managers or fund managers are actually working on this along with your tech?
Very few. Because I'll give you an example. We run about 30 different portfolios at any point in time, 30 different strategies. Your typical investment shop would probably have about, 20 to 40 researchers around that. We've got 5.
5 researchers.
Yeah, so we've got 5 researchers that sit around that. Because actually you're able to define very clearly what the role is they need to do and what the AI does before that. So it's about being very tight about who's doing what in the process.
So when we talk about AI causing job cuts, this is what it looks like. Are you putting the version of you 20 years ago out of business today?
It's a great question. I think the version of me 20 years ago didn't even have a spreadsheet. Actually, 30 years ago, didn't have a spreadsheet. So if I think about my start in finance, it was calculator and it was pen and paper. So Excel put a version of that out. PowerPoint then put a version of that out. So this is just another variant of that along the way. So does that role as I did it exist? No, it doesn't. But honestly, it hasn't for 10 years, and it will keep evolving, and it will keep evolving from there. So I think the real question is, can you improve what the retail investor gets? I think if we can improve what the retail investor gets, then it's a good outcome. If it needs less people to do it, and you can grow that investment base, actually, I don't think the industry will necessarily shrink, but you don't need that amount of research team, I believe, not for the kind of strategies that we run.
No, so fair enough. That was one part of the question, and whether you can add more wealth to retail investors. The other part of the question is also what happens to wealth managers? What happens to the wisdom or the instinct sometimes, or that gut feel that wealth managers bring? Does that become redundant going forward? Because you're also claiming to have much better returns than other avenues for your investors.
So I think good wealth managers absolutely have a place.
Only 5 of them.
No. That's an investment oversight. But if I think about a good wealth manager, you used the word there, kind of listens and uses their instincts. I think that's exactly right. People who do that absolutely have a place. People who just sell stuff because they're getting the highest commission for it, they have less of a place. So I think we've got to look at, from a financial service perspective, the wealth market as a whole. So I do think there absolutely is a place for those people that can listen. If I think about the asset management world, AI is really good at short-term recommendations because it can crunch lots and lots of data. But I wouldn't ask AI to give me a 6 or a 12-month view because the data set is so incomplete to be able to do that. You and I would have a view. Now, we may have the same view, we may have a different view, but we would have a view because as humans, we're used to dealing with incomplete data all the time. So I think if you want to use AI, it's got a place. If I look at my own portfolio, it's about 25 to 30% of my portfolio I use with AI, not 100%. So I think it's got a place in everyone's portfolio. So I don't see investment management disappearing because of it, but I do see different style of funds. I don't need it. I don't need a researcher or as many researchers for that short-term stuff. My AI can do it. I do need that wisdom for the longer-term stuff. Just think Berkshire Hathaway.
Okay, so I'm going slightly tangential here. I do want to come back to what this product does on a daily basis, but this right here, what you've described, is the big question mark. Right now, even with AI, across the board, across industries, and in yours as well, experience is still valued. The new people on the block who don't have that experience yet are not as necessary. But how do you get the next generation of experienced people if there's no one to go through that grind? You are you because you went through that grind with your calculator and your Excel spreadsheet, right? The Bruce today doesn't get that chance.
Yeah, so if I think of the Bruce back then with calculator and pen and paper, that role changed way before AI came along. But did that mean that those firms were recruiting less people? No, they were just recruiting them in to do different jobs. And I think we're going to see something similar here. If I look, my kids are in their 20s, so they're used to using AI as part of their daily life. So they bring it into their jobs. If I look, so my son's in wealth management in the UK. And I was speaking to him about it when I was last back. And I said, kind of, what tools are you using? How are you using them? Kind of usual kind of dad conversation. And he said, Dad, I'm 4 times quicker than the next person in the firm because I'm using AI tools for that. So I think that generation that's coming through are using them as a matter of course in their daily life. So I think the lot that are coming through just now will actually skill themselves up very quickly on other things. I think there's a slight gap in the group above that who haven't had to use them and are now getting slightly threatened. I think that's the gap. That's the group that I would worry for at this point in time.
Okay, fair enough. Now let's come to the day-to-day experience, because we talked a bit about how right now, and a lot of investors, a lot of people watching this, are probably using some form of AI or an LLM to either inform themselves or help make a decision on a regular basis. It's very possible the platform that they log into to make their investment decisions already has some version. Everyone has some chatbot.
Yeah.
What are you offering that's different? What is the differential experience?
Yeah. So we're not offering you a chatbot. We don't have a kind of Q&A piece. We've gone through and depending on the strategy you've bought, we've already made those decisions and come out with that. So what we're giving you is a ready-made portfolio. So think of it like a mutual fund or a PMS. The manager makes all of those choices and your money sort of sits alongside that and trades. The difference here is we're making those choices, but we're giving you the opportunity to not trade them. So you can say yes or no to all or to any one of those. So we're not allowing you to add something new in, we're just allowing you to take stuff out. So for me, this is how do you replicate what the best fund managers are doing without paying the price for that?
Okay, and you have a option to close out that trade the same day, or it does it automatically?
Day. No. So if it's intraday, it'll close it out. So we've got intraday, we've got kind of longer 2-week, 4-week, 6-week baskets that rebalance, and we've got MTF. So all 3 of those, the duration does differ depending on the different product.
Are these personalized to the user, or is this a one-size-fits-all?
So it's from a regulator perspective, I can say this is a good stock. And if I say it's a good stock, I'm saying it's a good stock for everyone, and that's deemed to be general advice. If I say this is a good stock for you, I need to know a lot about your personal circumstances in order to say that. So we very much sit in the kind of research analyst space where we're saying this is a good stock. So we'll say it's a good stock and everyone gets the same stock at the same time.
What is the ability right now of what you do to be nimble to what's happening around us? And case in point, we're talking at a time when, one day the markets are in the doldrums, the next day there's some recovery. Even while we're speaking, things could change dramatically geopolitically. There's a war on right now. What's the current portfolio looking like?
So actually, this week's been an okay week. You're right. Everything that's going on in West Asia just now is troubling on all sorts of levels. I had coffee with someone yesterday, and he said I went to cash. So there's lots of people take lots of different views on this, and that is the beauty of being human. What the AI's done, if I look at this week, it's stopped some of the long trading. It's typically gone short quite a lot, and on the kind of longer term baskets, those have all still beaten the market this week so far. Now it's early days; there's still kind of a long time to go. But it's what it does, really interestingly, it sees through a lot of the noise that we get caught up in. So it's looking at volumes, and it's looking at pricing, and it's looking at velocity, and it's looking at all of these things and making an inference based on that. Whereas, our fears and greed come out in kind of different ways, and we make different decisions, and our own biases come out in different ways. So it sort of sees through that and makes some quite interesting calls. And I think the best example in recent times has probably been, so remember the GST changes? In the run-up to that, it started to go very long on financial services, to the extent that we were looking at the strategies coming out, and it was showing 75% financial services. And we said, we can't possibly do that. So, normal investment advice, you would bring that down, and we did. But it got it absolutely right. It was picking up trends in the data that then, when the GST announcements came through and all of that kind of came out, all of those financial services plays really came into being.
Is the AI a better wealth manager, like for like, than your most wise ones? Is it a better wealth manager than you are?
So as I say, 25 to 30% of my portfolio is AI. So, and for me, it's about duration. So I think AI is really strong on that short-term piece, much stronger than I'll ever be on that short-term piece. So I use AI to help me do the short-term piece. For the long-term, but 50% of my own portfolio is in ETFs, whether that's S&P or whether that's Nifty or whether that's FTSE. It doesn't matter. It's in ETFs where I've taken a long-term hold, and I run about 20 to 25% on specific names that I like, that I've gone out and bought, or commodities or whatever else. So I use it. The bit of my portfolio that trades more often, the AI does that. The other bits that tend to be a bit more static in nature, I do that myself.
So who is this for? Who is this for? What is the kind of user base you have, and how do you see this growing?
I think, so right now, it's for anyone that is a DIY or digital investor. I think, interestingly, if I look at the base today, it's people who are in their 30s and 40s and 50s, which I didn't expect when we came out. We expected 20s and 30s when we came out. So the fact that it's skewed into there, it probably says more about our distribution networks than anything else. And if I look at the product set that we're building and the ones that are coming in, I expect to see more people in their 20s and 30s as that comes through.
And the number of users you have right now?
So we currently have 30,000 across a bunch of different products.
Okay, and how fast do you see this growing? What is the kind of investment interest you're seeing as well?
So we've been comfortably doubling, trebling every year. So I don't see any of that.
In your user base?
User base and amounts invested.
Okay.
So those two things keep going. We've got a retention rate of about, so it's subscriptions. So we've got a retention rate of about 65%, which, when you're charging a subscription, which can be at the top end $30,000, down to 50 rupees a day. So it's got a real kind of mix within that. But if you look at the top end subscriptions, you're seeing round about 2/3 kind of coming back. So you've got a high retention off of that. So therefore, what you have to sell new every time, it actually is reasonably straightforward to kind of double. It's getting to treble and more that's more interesting.
Okay. What do you see as the future of investment in India and the role of AI?
So, look, I guess there's two parts to that. So what about investing in India? It's a no-brainer, right? Demographics define destiny. If you want to take a 20-year view, India is a 20-year bull run. Now, in between that, it'll have some bumps, but it's a 20-year bull run. So I think investing in India is easy. As it relates to kind of the investment market in India, I think we're going to see more and more people come to the market, and the share of investing is going to increase massively. So as a growth market in terms of number of people and amount, that's going to be, I would argue, world beating for the next while as well in terms of rate. So I see that going on. I think the kind of flip side of all that is what is the company infrastructure that's serving that look like? And I think Grow is a great example, right? Grow is, a fantastic business that obviously IPO'd, but made some really interesting acquisitions, and have broadened the offering they've got. I wouldn't claim to know Grow brilliantly, but I'm kind of really impressed with what they've done. And if I think about the wealth tech space, I think there'll be a lot of consolidation, whether that is brokers or asset managers or distributors, and all of the tech that's going around that. I see quite a lot of consolidation coming in the next sort of 3 to 5 years, as more people look to provide more services under that same roof. So I think Grow is a great model for that. And if you look at the VC world, so many people missed out on Grow. So I think there's a desire there to make sure they don't miss out on the next one. It's clearly a growing market, no pun intended, that I think a lot of people want to be part of.
Yeah, that's a smooth pitch there. Look at me. But good luck, Bruce.
Thank you.
Nice to have you here on the show, and good luck with everything you're doing at InvestorAI.
Thank you very much.